Hi traders, it's Zoran Kresovic here, head of sales at Eightcap, and today I've got something slightly different to talk about for the trade of the week. And normally I would actually focus and put a lot of emphasis on currencies or commodities. At some point also I like to look at cryptocurrencies as well. But this week I think I will change it a little bit, and I would like to talk about equities. So in particular, I will actually focus on a local one here, Aussie ASX200. So basically an index market combined of top 200 ASX shares on the exchange with the biggest market capitalization. As you can see in front of me, there is actually a chart of ASX200. But before we actually dive into it, what I would like to talk about is actually a little bit of a fundamental backdrop, and then at the end, obviously focus on the technical side of things. So for this week, as you may be aware, and Fed in US is actually closing a deal that would raise the debt ceiling for another 2 years up until 2025, adding, I would say, probably a little bit more confidence in equities. So McCarthy and Biden eyeing this week's vote, and basically the agreement is actually about to take place later in the week. Obviously, the deadline initially was on June the 1st. That has been actually extended to the 5th of June. So there is actually extra few days to get that deal across the board. Just to mention as well, the debt ceiling increase would heavily impact, obviously, all financial markets, especially the USD equities and the bond markets. But also just to mention, the actual deal is worth $31 trillion, which is very, very significant. On the back of that, obviously, we've had the reporting season. So NASDAQ is obviously been absolutely hammering at the moment. And just a bit of a fun fact as well, that Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta, and Tesla are up 70% year to date, and other 493 stocks on the S&P 500 are actually up just 0.1%. So basically, the tech sector is absolutely driving the market at the moment. On a local front, just to provide a bit of an update, we've seen only gains 2.74% up year to date, which is actually very underperforming if you have a look at the S&P 500, which, for example, is up 11.27%. So obviously we are lagging behind here. Our equities are lagging behind at the moment. And it's not a surprise to see discretionary sector down 4.17% and staples 3.08%, which is very, very underperforming. And I guess the reason for that is obviously strong inflation, high cost of living, high interest rates, low disposable income. All this is actually having a massive effect on our economy here in Australia. And we've seen in May that, RBA interest rate actually lifted the rates 25 basis points, surprising the market. And we've seen a clear sell-off in equities. And as a result, obviously, Aussie dollar actually appreciated for that day as well. So let's just focus on the chart at the moment and see where could we be heading over the next few weeks or next few months with regards to the actual ASX200. So as I mentioned previously, ASX200 has been actually moving a little bit sideways. It reached its peak point and the resistance level as 7,350 back in April 2023. So that's a strong level of resistance. And if you have a look at the strong level of support, that's around $6,900. So that's pretty much the band. And in between that, we are seeing Aussie 200 kind of going sideways, but in a slight downtrend as well. If we apply the actual peak in February 2023 and we apply the downtrend line, which could be actually a line of resistance as well, we can see the ASX has been actually hitting that level on a few different occasions, but can't break above that. Also, what I've got on the chart is the Fibonacci levels as a support and also a potential retracement from the actual lows back in the week ending on 20th of March up to the actual high on 17th of April, the week ending on 17th of April. And as you can see, Fibonacci level of 38.2% and 50% has been actually coinciding nicely in providing that floor in the short term. So if you have a look at the bullish candle on the 26th of May, which was actually on Friday, because the market had a very, very bullish run in S&P 500, NASDAQ in US, and we followed the path as well. We can actually see that the market retraced around these levels, also supply and demand zone here. And in particular demand zone, and we're pushing slightly upwards. Now, what would it take for the ASX to actually continue its rise? Well, first of all, the debt ceiling needs to be clear as a daylight, and it needs to be done and dusted. So once we actually get the formal approval on that, and obviously more money is pumped and liquidity into the market, that could potentially mean that a lot of that flow would actually go into equities. Now, for an upside, we need to see a break above that black solid downtrend line, and we also need to see ASX200 continue to rise to that 7,350 level. Any break above that, we could go upwards and continue to actually challenge that 7,600 level, which was actually a peak on the week ending of 3rd of February. So that's if we are looking the bullish upside. On the flip side as well, if you're looking at the actual downside and we provide, there is a lot more resistance at these levels and we actually continue to reverse and go downwards, then the next level would be around 7,100. As it appears, there is actually a bit of a demand there. Next level would be between 6,900 and 7,000 level. So that could be a medium to long-term floor for the actual ASX. It's important to mention as well, guys, that discretionary sector has been one of the worst performing sectors for the past month, as well as the staple sector. What that indicates is that inflation is kicking in Australia. The interest rate rises are actually affecting everyday households. A lot of people are, in particular this month, actually going from the fixed income on their mortgages, and they actually fixed that. If they fixed it 2 or 3 years ago, it would be at 2.3, 2.4%. Now they actually converting to the variable. That all is affecting disposable income. That all is affecting everyday households and Australians. And as a result, that obviously affects the markets as well. So in the short run, in terms of the equities, we are probably bound to see some sideways moves. It's likely the market will actually go sideways as we anticipate and wait next interest rate decision, which is next Tuesday. If RBA does increase interest rates by another 25 basis points, that would actually take our terminal rate in Australia to 4.1%. As it is 3.85% at the moment. Obviously, that would be most likely quite bearish for the ASX. However, if the rates were to actually stand on hold and RBA comes to the end of the rate cycle and they consider or they change the tune and start talking about the drop in interest rates later in the year because the inflation is kicking in nicely, then as the market obviously perceives and sees what's going to happen in the future, obviously it would start discounting that and we might have a run towards that 7,600 level. Now, let's just go for this week and have a look what's important or what's actually driving the markets for this week. So if you log into the Eightcap client portal and you have a look at the economic calendar, my pick for this week is the ISM manufacturing PMI data that's coming on Friday night. But even more importantly, we've got the non-farm payroll data on Friday night coming out of the US. So previous figures came at 253,000. Market is perceiving or expecting this number to be 195,000. But out of the last 12 non-farm payroll announcements, we've seen the market overshoot the numbers for 11 out of 12 times. So even the market is expecting 195,000, we might actually get a slightly higher number. Obviously, if it is within the means and within the boundaries, then obviously the Fed might actually kind of put a pause. Otherwise, we might expect another interest rate rise in the US as well in the month of June. Obviously, if that is the case, that would be quite possibly bearish for the S&P 500. Russell and US 30, obviously and likely to actually come and affect our markets as well. So something to look forward to. But just to mention, Tuesday's interest rate decision next week will most likely pave the way and provide more clarity in terms of the ASX 200. That's it for this week. Pay attention to these key fundamental data and happy trading. If you have any questions, please get in touch with us and we are more than happy to help you.